Scott, thank you for joining us on Trade Finance Talks TV.
Thank you. Thanks for having me. Really appreciate it.
So, what's your elevator pitch? Who are you, where are you from, and what do you do?
Sure. Scott Etienne. I've been about now 37 years in the trade credit industry, so kind of a geek. But the last 11 years with Willis Towers Watson and 25 years prior to that with Atradius Trade Credit in various roles of accounting, underwriting, sales, and now I head up the global lines of business for trade credit for Willis Towers Watson.
Great, thanks. We love trade geeks here. So,
Good.
So can you give me a bit of an overview on trade credit and capital relief policies?
Sure. I mean, one of the biggest growth areas in trade credit has been the capital relief finance policy, the Basel, capital relief, to substitute insurance in the place of the other ratings, right, to get some more relief and less capital expenditures. So that's been a big growth area in trade credit, and so there's naturally been a rise in the policies that are being used for them, a lot of them now converting over to capital relief type policies.
Great. So what's happened before, or what's the current environment when it comes to Basel III?
Sure. The Basel III has a lot of very talented people within the industry, both on the bank side, the insurance side, and the brokerage side. And all of them have developed their own bespoke policy to be able to address these and to be able to get clean opinions from the attorneys to get the capital relief they're seeking. That's what we're doing today. And when you think about that, if you look at all the different policies that are in place, all the different institutions, you have upwards of 80 to 100 different policies, all bespoke. So it's while they may be saying the same thing, they're all saying something a little bit different.
Yeah, absolutely, and I guess it goes on to the recent news around trying to harmonise those policies, and I think very recently the ICFA Basel III harmonised policy was launched. Can you talk to me a little bit about that?
Yes, that was a nice journey, 3.5-year journey that
Wow.
we started back in March of 2018. And it included over 45 institutions, banks, insurance companies, brokers, and law firms, but basically to get the feedback from all sides of the equation to see if there's a way that we can streamline the process and use a policy more as a starting point to get through 90% of the negotiations have already been done and dusted and looked at by law firms and all sides, but then to really try to be a really good starting point to launch forward from that point on, rather than a bespoke, setup that you have.
Great. And what's the impact that this is going to have on market participants?
Well, nobody likes change. So when you negotiate these forms, you spend a lot of money to get this done. Therefore, by spending that and getting it exactly the way you want it, it's not easy to move somebody off of that position. Mm-hmm. So we're looking at the main problems are coming in with capacity being needed more and more. These deals are bigger and bigger. Not one insurer can provide that capacity, nor could one bank possibly fund this. So insurers are going to have to syndicate, and banks are going to have to participate. So you could have upwards to 10 to 20 parties on one contract, and you can't have 10 to 20 different forms managing that. So there's got to be a form that everybody can agree to, and that's what the whole idea, the genesis, if you will, of this policy harmonization was.
Yeah, and I think that's really important, and hopefully creates quite a lot of efficiency there. Is its usage optional?
It is. For any bespoke program, a bilateral program, you can use your bespoke wording. We're not forcing anyone to change. Yeah. But as things start to move down the line and more capacity is needed, in the recent news of Zurich pulling out of the market and QBE shutting down the U.S. operations for trade credit, that pulls valuable capacity out of the market, which means we're going to have to go to more and more carriers to syndicate to be able to fill and subscribe lines. So there's the need really for the trade credit harmonized policy version as an alternate to the one that you may not need that if you're dealing with one single party, one insurer, one bank, or a participant bank may already like your wording. So again, not mandatory. So
no, but it would be interesting to then track that usage in the market over time, and obviously this is iteration one. Where do you see this policy kind of evolving, and how do you see that happening?
Well, we're hopeful, and I spoke today about this in the role of the broker, right? I really think the brokers need to really come together as the brokers really drive the market with their customers. And here, if we can start collectively, and this was a collaborative effort from a lot of different firms, if we can all start to move forward and say, this is what we really want, this is how we're going to start, and really streamline these negotiations, I think eventually over time you'll see that just like the MRPA that was released 10 years ago, it was resisted at first, but then over time it gets socialized and people start to look at that document. But also, if you're looking at a new banks, more banks are going to come into the space that have never used trade credit and capital relief.
Yep.
So where do you start? So the biggest issue, if you're a new bank, is all the forms that have been negotiated they're all under NDAs. So we can't share a form with you, and neither can really anybody else, neither can these insurance companies. So having a reference point that IFFA's put out is a very good reference point because it comes with a joint memorandum from two of the top law firms, Sullivan and Clifford Chance. And with having that, it's very good guidance to say, okay, I want to get into the space, and here's an industry body that's done a lot of the homework for me to be able to jump in, and it's a very fair contract.
Yeah.
So very balanced.
Yeah. Scott, thank you very much for the really clear overview on the IFFA Basel III harmonised policy. It's been great to have you on Trade Finance Talks TV.
Thank you. Appreciate it.